Friday's market wrap-up here at Wealth Creation Investing. Matthew Buckley, call sign Wiz, the Chief Investment Strategist here at WCI. And wow, what a week. The taper finally came to the markets, and how the markets react? We're bullish. We go up from here. Well, I'd be a little careful, and let's get to that. Let's start with the news. First of all, U.S. GDP, as reported this morning. Let's just go right to the tape. U.S. GDP, and this is final, right? So we have advanced, preliminary, and final GDP, and they all have varying degrees of impact. And it's pretty funny that the government reports the same number in 3 waves. Why don't we just wait until we know the data instead of kind of, fuddling our way through it? But there you go. 4.1% GDP. Let's just take a look at some other information, though, that came out yesterday. Existing home sales imploded. We were looking for over 5 million, well short of 5 million. The Philly Fed imploded from a 10.3 to 7. Conference Board's leading index of economic indicators was essentially flat. And the Conference Board's number is pretty interesting, because it takes a look at 10 economic indicators: housing, stock market prices, credit trends, interest rate spreads, a whole bunch of stuff, and it was essentially flat. So not the best economic news, but the market right now and the futures are looking at final GDP at 4.1%. Biggest gain since 2011. Wiz, raise the rally flag. We go higher from here. I got to tell you, folks, I don't believe this number. And I know for a fact that the number is wrong. Why? Because the Obama administration months ago, I think about eight months ago, changed the way we calculate GDP. Okay, so, and again, that was buried on page D22 and wasn't that widely reported in the media. They did. If you can't hit the ball over the net, simply lower the net. Wiz, are you kidding me? You actually think that this government lies to us? And you probably didn't see this about a month ago. Remember when that jobs report came out before the election? Biggest drop in 30 years, right? I called BS on that the second it hit the tape. Jack Welch was on CNBC calling it an absolute lie and fabrication. And of course, the financial and liberal media rolled in on him and made fun of him as being the kooky old man. A couple other people called it fake. And I got to tell you, since they didn't want to get attacked like Jack Welch, I know a lot of heavies. We all were laughing on the phone and emails like, yeah, okay. It's a lie. Turns out it was a lie. The government admitted it was a lie. So be very careful of numbers that come out of the government. I laugh at people who, I have long positions in China, and I report some of the Chinese data, and people say, well, Wiz, how can you believe numbers that come out of China? I don't believe numbers that come out of the United States, so how the hell do you expect me to believe numbers that come out of China? So you have to go with your gut and trade what you see. But I got to tell you, folks, if bonds are going to get hammered in 2014, stocks are going to get hammered. Now, as we transition out of bizarro market, what's bizarro market? Good news, good news. Bad news, good news. Awful news, great news for the stock market. Right? Awful economic news meant great news for the stock market, because that meant the Fed wasn't going anywhere and the market was going up. Now, as we transition into, quote, normal market, bad news is going to be bad news again, and awful news is going to be horrible news. So for those of you who have only started trading recently or investing over the past couple years, and you're used to the market going up on just about any sort of news, get ready. And if you don't know, markets go down a hell of a lot faster than they go up. And when the stampede happens, right, a lot of these 500-pound heads are saying, well, market's going to go up because there's a lot of money sitting on the sideline. Here comes mom and pop investor. And we've jokingly at Top Gun Options said that whenever the Wall Street Journal has that on the front page, it's time to sell. Here comes the retail investor. There goes Wall Street. Be very, very careful. Wall Street heavies, all these folks can get out of positions a hell of a lot longer than you can. In the time that you're running the Costco and picking the kids up for school, the market can turn and be down 600 points and wipe you out. Be very, very careful and make sure that you have hedges on. We had a hell of a year. This is our primary trade alert model portfolio, which is now called the Urgent Alert portfolio. Past the $50,000 point, actually hit 52 grand in gains year to date yesterday. That is including our hedges. Okay? Like, for example, SDS, Sierra Delta Sierra, right? Only a little bit of a loss for the year because it was used appropriately. When I thought the market was going to go down or I wanted some protection, I went long SDS. Look at our other huge winner for the year, the VIX. Nearly $7,000 in gains on the VIX this year alone. Betting at various times that volatility was going to either explode or rolling inverted and pulling down and saying volatility was going to implode. Okay, so be very careful going into 2014, folks, and ringing the bell and putting your rally cap on, because, like I said, now that the Fed is starting to remove some legs from the stools, we have to stand on our own. And if we can't stand on our own, I'm telling you, after a 20-ish rise in the S&P and just the hell of a run we've had in the market since the first TARP or QE1, I wouldn't be surprised if we see some extreme volatility in the markets. And like I said, folks, once there's panic, and talking to a lot of my buddies in Chicago, London, and New York, it's funny because they're like, Wiz, a lot of the new traders, and we count new as people who've been here 3 years. Do you think they sound, oh, well, they're kind of experienced? Well, they're not. They've never gone through a bear market. They've never seen an extended downturn in the market, right? Any downturn they've seen in the market, they've been told is what? A buying opportunity. Get back in, the Fed's here. Well, next time the market goes down a little bit and more, are they going to be buying on the way down? Which is going to completely screw them and mess everything up. So be very careful, folks. If you're doing this solo, God bless you in 2014. Otherwise, get on board here at Top Gun Options in one of our services. Give us a call at our 800 number. It's on our home page here. 888-308-2112, and we'll get you into one of our live trading services or alert services or even coaching. Wingman Group Coaching. You can do one-on-one coaching with our professional traders, or you can click on this banner right here at the top right of the site, Interested Managed Accounts. We have a strategic partnership with a company in Chicago, a registered investment advisor and hedge fund in Chicago called the Black Bay Group, where they can manage a portion of your portfolio. If you want to fish for yourself, great. Well, why don't you give some bait to some professional fishermen and let them go on the other side of the lake or a different lake and fish for you as well? That's part of a diversified portfolio. You can shoot us an email, managedaccounts@topgunoptions.com, and I'll hook you up with the Black Bay Group, and you can take a look at this page and see their performance. There's the S&P 500 in the brown. There's the Black Bay Group's blended strategy since inception in 2009, and that's $100,000 worth. Even being a political science major, knuckle-dragging Navy fighter pilot, I can tell you which one has done better. Average number of winning months, 64%. That is awesome. That, well, Wiz, 100% would be awesome. 100% is physically impossible. 90% is impossible. Most professional investors, traders, hedge fund managers are looking for a 60% win rate. Because why? Over time, that's awesome. That's huge. 64% is above the average. And down at the bottom of the page, you can download the McGladrey certified audited returns for the blended strategy. Always, if you're ever looking to invest money with anybody, grab their audited returns from a respected accounting firm, not Bernie Madoff's accountant who lived in a one-bedroom apartment in a hotel. That's not the accounting firm you want. And you can also take a look at a sample client statement from Pro Funds, which is one of the largest mutual fund companies in the country, which is where you open your account. You don't open an account with the Black Bay Group. You open your own account, and then you let them manage it for you. Okay, I got to run. Got to trade the open here. Going to be an interesting day. We've had a nice bounce since the Fed. I think next week, it'll be a slow week because of Christmas, but, I think we're going to start getting a little bit of a hangover as the market really, really wakes up to the fact that the Fed's leaving. Okay, so have a great weekend. It's been an awesome week. Happy hunting. Make sure you hedge, and I'll talk to you guys Monday with Monday's Market Outlook. Have a great weekend.